This is an Equity Mates investing podcast, and today we're doing a deep dive on Tesla. If you enjoyed today's episode, make sure you subscribe. All right, Ren, a very well-known company. So where do we want to start?
I want to start with something I shared on our social media channels a couple of months ago. Follow us on, it was on all of them, Insta, Twitter, Facebook. I think I even put it on Threads.
Did you do it on LinkedIn?
No. Simon runs
hate
our LinkedIn. I hate LinkedIn. Anyway, we're not here to talk about that. So here's something I shared on social media, ex-LinkedIn.
Okay.
Tesla's past...
Snapchat?
No.
Damn, son. Okay, sorry.
Tesla's past 6 months recalled 2 million cars in the United States.
Not good.
Recalled 1.6 million cars in China.
No.
Laid off 10% of the workforce. Recalled all Cybertrucks. Cut prices on all cars and self-driving software. Share price down 33%. Asked shareholders to approve a $56 billion pay package for Elon Musk. One of those things is not like the other.
Yes. So 1, 2, 3, 4, 5, 6 of those things, you could just like strike any company to face those. CEO would be coming under pressure, and the CEO himself is asking for a $56 billion pay package, which I may add, for those that haven't been following this story, was actually struck down by a federal court.
So there's two things. It was actually approved by shareholders, first of all, in like 2018.
Yeah.
And then a court in Delaware struck it down.
It's a court in Delaware, yeah.
And
So it was approved based on performance metrics that probably at the time everyone was thinking, this is wild. This is wild.
This isn't going to happen.
This isn't going to happen. Yeah. And it did happen.
It did happen.
And so it did happen. And so Elon unlocked a $55 or $56 billion pay pack. But then the Delaware court said this is ridiculous. And also because he just had probably too much sway over the board that approved it. There wasn't a whole heap of corporate governance going on.
Yes.
Elon obviously didn't like that because he needs the cash probably for a declining Twitter.
I mean, look, to be honest, I don't have a lot of sympathy for the bloke. I do have some sympathy here. If like, let's say, we're running Equity Mates and we went to our board and said, if we're the biggest podcast in the world, if we hit all these like crazy, unrealistic milestones, we want to unlock a heap of value.
Yeah.
And the board is like, yeah,
sure.
We'll vote with the shareholders. Yep. Everyone's on board. Like, because if you nail this, we're all going to do
rich.
well.
Yeah.
And then we go and do it. See you later, Joe Rogan. We're the biggest in the world.
Yeah.
And then we turn around and some court strikes us down. Yeah. Like, I get the frustration from his point of view.
Yeah, 100%.
I also get the counter argument around like the level of corporate governance. And
it's a tricky one.
Yeah. And no one in the world needs $56 billion.
No.
Yeah.
So anyway, it's going to a shareholder vote again, and Elon's hoping to reverse that decision. But anyway.
So look, the point of that wasn't to get into a deep conversation around the ethics of CEO pay. It was to point out that Tesla has had an incredible run, and everyone is familiar with the company, but the last 6 months have been tough. And the question is, what comes next? But before we get into what comes next, let's quickly cover off what has come before.
Yes. So, company history, founded in 2013. Founded in 2003. Surprise, not by Elon Musk.
Yes.
A lot of people, rightly so, I guess, think the company was started by him. It wasn't. It was Martin Eberhard and Mark Tarpenning who were the founders. Elon joined in 2004 as the largest shareholder, and in 2008 became CEO.
Yes.
So he wasn't the founder. With the goal of creating premium electric cars to sell to fewer people and then use that business model to get cash in and then continuously drop the price of cars until they became standard.
Yeah.
That was the business plan. So he created the Roadster in 2008, which is no longer made, and then since then has continued to develop models of Tesla.
The Roadster apparently is coming back. Tesla love announcing something.
Yes.
But they announced they announced that a new Roadster is coming out.
Right.
For those who
loved it.
Yeah. The Roadster really just a Lotus Elise with an electric engine.
Is it?
It used the Lotus chassis.
Okay. Yeah, nice. All right. So they had the Roadster in 2008. Along came Model S in 2012. Then there was the Model X SUV in 2015. the Model 3, which was their cheaper version in 2017, Model Y in 2020.
Can I just pause there?
Yes.
Do you notice what they've done with the those 4 models?
The
S3XY.
sexy.
Yeah.
It's
There's
so-
always some like joke in there. Yeah.
Sexy. And then the infamous, then there was the Tesla Semi in 2022. And then when you said that they love announcing stuff, the infamous announcement of the Cybertruck in 2023.
Yes.
Where Elon said the windows were impenetrable.
And then smashed.
And then threw a rock
Yeah.
through it and it smashed.
Yes. Yeah.
Oh.
A lot of people didn't think the Cybertruck would ever see the light of day, but it has. It's out
It has.
there.
Well, you said at the top they've recalled all Cybertrucks.
Yeah.
I looked it up. There's only 3,800 that have been delivered. So
Yeah. There was a lot of people pushing back in the comments that the Cybertruck hadn't been recalled and it was just a software update that the mainstream media were misreporting. So let me clarify for everyone. The accelerator pedal was slipping off and getting caught in the footwell. They've recalled them for a hardware reason.
Yeah.
They're putting a big rivet in it to hold the accelerator and then returning them to customers.
it's unbelievable.
That is not a software update.
No. That's a full on recall. Anyway, the Model 3 is the all-time best-selling plug-in electric car worldwide, and in June 2021 became the first electric car to sell 1 million units globally. Fierce competition, though.
Yeah. BYD. We will get there. Before we get to the competition, let's talk about the success. In October 2021, Tesla's market cap reached $1 trillion US. It's the 6th company in US history to do so. As of 2023, it is the biggest battery electric vehicle maker, 19.9% market share. March 2024, it's the world's most valuable automaker. Since IPO in 2010, the share price is up more than 11,000%. That means you have 100 bagged your money. Pretty impressive.
Wow.
But at its peak, before its recent fall, it was up almost 32,000%.
Yeah.
So you would have 300 times your money.
And credit where credit's due, have spent almost $0 on marketing.
Yes.
Because they have a founder who is out there spinning up PR almost every second day.
Yeah, that was like the real thing about them, that, they would just, the cars spoke for themselves and all
Or
that.
Elon did. Yeah.
They've now got showrooms. Like they had that showroom in Martin Place.
Yeah. I think, but you never see a Tesla ad on TV.
You never see
an ad at
hold
home.
on. But you never see a Ferrari or Lamborghini ad either.
Yeah, but you see them in like print magazine and stuff. The print magazines on planes.
What's the saying? Like one of the luxury car companies, like, we don't advertise on TV because our customers aren't watching TV.
Yeah. I can't remember who said that.
I don't know, someone. Call it Enzo Ferrari.
Call it Ferrari. Yeah.
So that's the car story. The car story is a well-known story. Most people have everyone's saying the Tesla these days.
Sorry, I'm just looking up this as we Google, but Ferrari's also in that camp. $0 on marketing, apparently.
There you go.
Yeah.
What about
Since its launch in 1966, spent $0 on advertising. Instead, their focus was on producing the best cars on racetrack.
I mean, the F1 is just a giant ad. Yeah.
Everyone wants to.
Yeah.
What do they say? Everyone wants to drive for the car in red.
Yeah.
Anyway.
So the car story is well known.
Should we look up all marketing budgets for premium top-end
Look
cars?
up Lamborghini. See what they spend.
Automobile Lamborghini is part of Volkswagen. They spent under $100 million on advertising in digital and national TV in the last year. So Lamborghini can't quite get it done.
Well, they're not in the F1. Although,
No,
are
they're
they
not.
joining?
No, Audi's joining.
Okay.
Yeah.
They spend money on advertising.
Definitely. Yeah.
Why aren't Lamborghini in there?
In what?
The F1.
Good question.
Thanks.
Don't need it.
Anyway, let's get back to
Yeah, sorry.
the story at hand, which is
Yes.
Tesla. Because the car story is well known, but they do have some other business lines that are worth understanding. So there's Tesla Energy.
Yeah.
Now, they acquired Solar City in 2016. Slightly controversial. It led to a lawsuit. I think it was started by one of Elon's cousins or something. Shareholders sued because there was questions about the adequate disclosures around SolarCity's liquidity and stuff like that. That's in the past now. Tesla Energy today sells solar panels that are, I think, manufactured by third parties. They have, do you remember these solar roof tiles?
Yeah.
Yeah, so they make them. I'm not sure how popular they are or how much they're used, but the idea is rather than installing solar panels on your roof tiles, on your roof, why not make the roof tiles themselves solar cells? Pretty cool idea.
Yeah.
And then they also create and sell solar inverters. So there's like a solar arm to the business. Then there's energy storage. So that's adjacent to Tesla Energy. They create the Powerwall, which is the, I guess, like the at-home unit, the smaller unit that you see on people's walls. And then they've got the Mega Pack, which is like the utility scale energy storage unit.
Which they put in South Australia?
Yeah.
Is that right?
Yeah.
With the SA government bought one or two.
That was like peak Elon when things were going well. Mike Cannon-Brookes tweeted at Elon and Elon said he would do it. And he did it in like 90 days or something. Yeah. And he said if we didn't do it in like 90 days, it would be free. And they did it. Yeah. Apparently it works. So it works quite well. It's not like massive storage. Like it's not like, base load level storage, but it's quick. So when there's a spike in energy prices, it can respond really quickly, whereas a coal-fired power station can't because it takes so long to power up. These batteries can inject energy into the grid really quickly. Yeah. So it serves a purpose. So Tesla energy storage. Then there's the charging network. So Tesla are building out fast charging network really across America, but really it's going to have to be across the world, so people can recharge their electric vehicles. And then finally, they have an insurance arm. They've offered their own vehicle insurance in the US since 2017.
Fingers in many pies? Yes, that's the right saying.
Yeah.
Yes.
Not that many pies.
Oh, well, we'll get to some of the weird ones that they have fingers in a little bit later, but let's have a look at the...
Put it this way. Elon's got a lot more fingers than Tesla does.
True. Let's have a quick look at their financials. So revenue from say 2020 was 31 billion, 2021 53 billion, but then since then they've been on a bit of a revenue. Well,
you say since then, that's 70% growth in that year.
Yeah, it's pretty phenomenal.
Yeah.
Growth rate has slowed, but that's because they're reducing the unit price of cars and not selling as many cars as well. They're kind of starting to slow a little bit here because the competitive set that they're up against now is pretty intense.
It's just also the law of large numbers.
Yeah.
Like sustaining a growth rate as your numbers get so large is difficult.
Yeah.
Especially when behind that growth rate is physical goods that have to be manufactured.
Absolutely.
Yeah.
But anyway, still 50% growth in 2022 up to $81 billion, and then 2023, $96 billion. So still able to grow revenue by about 18%. They were unprofitable for a while, but have been profitable since 2020. In 2023, they turned a profit of $14 billion.
Yeah, it's pretty impressive. They really are. They got through the valley of uncertainty, and they are a fully fledged car maker that will be here until the end of time. They'll be here beyond Elon. I mean, unless something goes dramatically wrong.
Yeah.
The question is what's the sustainable level of production, and how many cars are they going to sell each year, and then what's the right valuation?
Yeah.
And I think, over time, they're going to be valued more as a traditional automaker.
Yeah.
And they're going to have the margin profile of a traditional automaker rather than the tech valuations they've enjoyed.
Yeah.
But doing $100 billion a year in revenue and making $15 billion a year in profit is incredible.
Yeah.
We forget how derided electric vehicles were when they were first created.
Yeah.
There is a long graveyard of car companies that tried to do electric vehicles and couldn't do it. And everyone thought electric vehicles were crazy, going up against the power of oil and gas and traditional automakers.
Yeah.
And we just sometimes need to pause and just reflect on how incredible it is.
Yeah, taking away or sort of forgetting Elon's craziness and a lot of things he's doing outside of Tesla, you've got to admire the business plan that he put in place day one
Well,
and
maybe
to execute.
he didn't put it in place in day one because day one he wasn't there.
Well, you know what I mean. When he came in, he's the one who's driven this. He didn't
Pun intended.
come up with the car, but he was the one who said that the way that we build this is by building expensive first.
Well, that's certainly his version of events. I think the other guys might say that they had a similar plan.
I don't think so. If there's actually a doco about those two guys, and it definitely doesn't. It's not Elon related, and it's that they were just nerdy engineer guys.
Oh, okay.
And Elon's sort of seen an opportunity, kind of like what he did with PayPal. Comes in, swoops in, and
PayPal was a bit different because it was a merger. He was
True,
X.com.
true,
Peter Thiel
yeah.
was PayPal.
But anyway, credit where credit's due. Although he's losing the plot a little bit.
Yeah. So yeah, really, like the question becomes, what is the future? And before we even get into the business side of the future starts financially.
Yeah.
Because the future for Elon and really for Tesla shareholders is what I said before, what's the margin profile of this company? Like right now, you know, they've got a 15% net margin, $15 billion on $100 billion in revenue. For comparison, Ford has a 3% margin, VW has a 5% margin, BMW has a 7% margin, Toyota has a 6% margin. You can sort of see the theme here that's emerging, that Tesla's 15% margin is quite high. For comparison, in US dollars, Toyota sells about $250 billion in cars a year, so about 2.5 times what Tesla do, but makes pretty similar profit.
Yeah, well, VW is 322 million
in sales,
in rev.
So really, like if Tesla's margin normalizes, like reverts to the mean of a traditional automaker, they're going to have to get to that size, the Toyota or VW size, to have similar profit that they do today.
Yeah.
So you could see a world, and this is why I say the future of Tesla starts with the financials. You could see a world where they 3x their sales, sell like 3 times as many cars, or if they have to keep cutting prices, sell 4 or 5 times as many cars. But their profit, because their margin keeps getting squeezed, doesn't move.
Yeah.
And Tesla investors are going to hate me for this because they're going to say, you haven't thought about the fact that Tesla cars are better, so they get a higher margin. You haven't thought about like all the adjacencies that they can also sell, and you haven't thought about robotics and auto taxis and all of that stuff. And let me tell you, I have thought of it. But my response is, what we're seeing now, what we have now, and what we can value today is the car company that exists today.
It's increased competition is what's happening right now.
Yeah.
So we've got...
they were so successful that they dragged the rest of the industry to compete with them.
Yeah,
they
so you had
changed the industry, and now they have to compete with them.
Yeah, so you had the traditional car manufacturers, Mercedes, BMW, Volkswagen, all throw money towards electric vehicle development. Subsequently, they have pulled back a bit because the desire for electric vehicles over the last sort of 12 months has waned a little bit. Big money is being spent by these companies. China, though, BYD is absolutely hot on the heels of Tesla. And I'm seeing it on the streets here in Sydney. Like there's BYDs starting to pop up more frequently than I'm seeing Teslas. So huge competition. And inevitably we know what happens when competition is rife. Your margins are squeezed. Yeah.
I don't think the traditional automakers are pulling back as much as has been discussed. Like I know Ford had announced that a plant that they're not building anymore.
Yeah.
And I know like some of the Europeans are slowing down, others aren't. But I think it is just a question of timing. It's a question of when, not if. They make that transition.
Yeah.
And there's nothing that's really indicated otherwise.
Yeah.
Especially the Europeans.
I mean, they've come out and said we're just going to ease up here for a bit until the moment's right.
Yeah. But like BMW sold 40,000 more electric vehicles this quarter than the quarter before. It's just a question of retooling their entire supply chain and managing their existing contracts and all that stuff. Like obviously demand is softening. Directionally, it's pretty clear. Yeah. Let's talk briefly about the future, robots and robo-taxis. A huge potential in robo-taxis. I think if they can nail self-driving and if cars can truly be autonomous, the business opportunity there is going to be incredible. The idea of an Uber-like service without a driver, especially with an electric vehicle where your inputs are cheaper and you don't have as many moving parts, so you have less maintenance. Like, you can build a pretty incredible business case for that. It just requires this technology that has always been 5 years away, has always been just over the horizon to actually get there.
Yeah, that's what forms Kathy Wood's thesis, that her price target for Tesla is about $2,000, and a huge portion of that thesis is around the potential that robotaxis have on the business model for the revenue, I guess, profile for Tesla.
So it's from 150 to 2,000.
Yeah.
Okay, cool.
She loves it.
Yeah. And look, finally on robots, I reckon it's vaporware.
Yeah.
I reckon it's just something that they want to announce to get headlines.
Yeah.
I don't think the Tesla robot Optimus is going to be a meaningful contributor to their bottom line.
Yeah.
And if I'm wrong, then hey, I'm wrong and I missed out on a great investment opportunity.
Who knows? It might be something that pops up in 15 years where they're like, we've been developing this for 15 years, but the here and now is the cars.
Yes.
Yeah. Well, welcome back to Equity Mates. We are doing a deep dive on Tesla, and it is our pleasure to welcome to Equity Mates Christopher Tsai, Chief Investment Officer at Tsai Capital. Christopher, welcome to Equity Mates.
Good morning, Bryce, and good morning, Alex. Great to be here.
So, Christopher, we've spoken before the break about Tesla, and this is the part of the episode where we bring in an expert to understand the investment case. And we always like to start with how to analyze the company. So what are the metrics that matter? What are the red flags that you're looking for? What are the key pillars that form your investment thesis when it comes to the analysis of Tesla?
The metrics that we use for Tesla are very similar to the metrics that we use for other companies in our portfolio. So we own about 21 companies today. We think that as long-term investors, the most driving metric has to be the sales of the business. What does that long-term trajectory look like? And what are the unit economics related to those sales? So obviously, if you think about selling something that is not profitable, that's not going to do very much for shareholders over time. So we need a long runway of growth where we think that we can compound sales at high rates of return over long duration. And we need that to be very profitable. When we dig down a little bit more, what does that mean in terms of profitability? We're looking for high returns on invested capital. And most importantly, and this is something that I think a lot of investors overlook, and you can't really screen for it. So you have to kind of do the deep work. We're looking for high returns on incremental capital. So think about, for every dollar you're putting into the ground, what are you making on that? That's very important. When you have high returns on incremental capital, that then translates into the kind of metrics that do show up on a screen, like high returns on equity, high returns on overall capital. And we want to have all of that with a balance sheet that is really, really sound. So we're not looking for speculative businesses at Tsai Capital. We're looking for companies with really strong, durable moats. And we put all that together in a package, and that becomes kind of our filter. And a lot of that, guys, you can't really screen for.
Well, I mean, you start to unpick some of those elements, and there's no doubt Tesla ticks some of those boxes. In the 5 years from 2018 to 2023, it's gone from 20 billion in sales to just shy of 100 billion in sales. It's an incredible story, and it is profitable. And we spoke a little bit before the break about the profit margin of Tesla relative to some of its car-making peers, sort of 15% compared to 4 to 7% for its peers. So you start to tick some of those boxes, but investing isn't a backwards-looking game, and you don't get points for what a company has done. It's a forward-looking game, and it's about what comes next for the company. So when you start to think about the bull case for Tesla, and you start thinking about what your thesis could be from here, how do you start to build it, and what are the key pillars of it?
Yeah, so those are great questions and questions that we certainly ask when we're looking at making any investment. Before I dive in there, I just want to tell you guys how we think about the profitability of Tesla as an EV versus traditional auto, because we don't look at it the way that you would read about it in the press. Let's say 10, 15% margins, net profit margins for Tesla versus something similar versus in the traditional ICE space. Because the electric vehicles that are owned by traditional automobile manufacturers don't have a profit margin. In fact, they have a very negative profit margin. So the traditional ICE business is kind of masking the losses of their EV subsidiaries. Does that make sense? So Ford, for example, was recently losing roughly $40,000 a vehicle, an EV vehicle. But that has since ballooned as a result of macroeconomic issues, their own issues, and so forth over just the past few quarters. Now they're losing $100,000 a vehicle.
Wow, that's so much.
GM and Fiat and all of these other companies are in the same position. They're losing money on their EVs. So we don't look at it and say, okay, Tesla's making 10, 15% profit margins net on their business and traditional auto is doing roughly the same. Doesn't make sense. It's like comparing, horse and carriage versus ICE in the 1900s. Horse and carriage pretty much, went out of business. They didn't have anything to mask their business, but they were on the way out. And we think traditional auto is on the way out.
That's a big statement, and I mean
Yeah.
that would underpin any investment thesis over Tesla. But I guess can you unpack that a little bit more? Like, where does the discrepancy come from? Like, how is it that Tesla is able to produce this vehicle profitably when Ford, one of the undisputed leaders in car manufacturing, loses $100,000 producing a similar vehicle?
The real answer to your question, which is a key question, Alec, is that they built this company kind of with shoestrings, and they had no choice but to make it as efficient as possible. And you have a fanatic CEO who's extremely cost conscious. They're not unionized. Their employees don't want to be unionized because they would make less. They get stock options. And Elon thinks with first principles. He also thinks long term. So he's willing to spend money now, or I should rephrase, he was willing to spend money in the past, invest significantly without the prospect of an immediate payoff. But now, as the company has hit massive scale, critical scale, you're seeing the benefits of its investments in the past. Traditional auto, on the other hand, if you think about kind of like the structure of traditional auto, two things come to mind. Number one, how traditional automobile manufacturers still have to go back to like a 1960s book in order to make a change. They have to see if it's in that book, if they can make a change. Because it's the unions, the unions control what can be changed. And so they move very, very quickly. If Elon sees a problem, they iterate constantly, improving the outcome, starting with first principles. So that's number one. Why are they so much more efficient? And secondly, like they've hit critical scale, massive scale. And that, of course, is hugely important when you consider things like Wright's law. There was an aeronautical engineer by the name of Theodore Wright, and he talked about cost curves. And Bryce is nodding like he understands what I'm saying. He talks about cost curves and how as you increase the cumulative production of something, any good, right, your costs fall by a certain percentage. So Tesla's just much further along the cost curve as a result of its scale than any of its competitors.
I mean, the obvious question that comes from that is once some of these internal combustion engine manufacturers reach similar scale, and like let's, for the purposes of this exercise, assume that they do reach similar scale, will they see a similar cost, a unit cost reduction?
So I had that question too as I was thinking about all this. And it did not occur to me that yes, but the point is, where are you along that cost curve? So as they scale and they hit, let's say, 2 million vehicles, where will Tesla be? Tesla might be at 7, 8, 9, 10 million vehicles, right? And so they're now farther along the cost curve. And as a result of that is a much lower unit cost. We're looking at businesses that not only have the ability to grow sales rapidly, and we think that Tesla is on a path to reaching 15 million or so vehicles by the 2030s, early 2030s, if not 2030. But they're going to do that in a very, very profitable way because their unit costs keep coming down. And we can talk about that because that's like an integral part of the strategy.
Well, Christopher, it'd be great to understand more about the bull case that you have for Tesla. And I think if you could also address, Alec and I before the break were talking about where the media gets caught up with robots and solar panels and all the other things that Tesla has their fingers in the pies. I think they have Elon did a big battery here in Australia at one point as well, which was through Tesla. So yeah, if we could close out the conversation with the bull thesis and the pillars that you're looking at, but also if you can speak to those other areas of the business as well.
Yeah, so first, just for context, we bought Tesla originally in February 2020. Our average purchase price was about $41.66 a share. And it was, of course, much, much higher than it is today. And so we're up maybe a little bit more than 4 times today. But we think there's that tremendous bull case. In fact, it's our top conviction idea today. It's such a high quality business that is indeed misunderstood. So what do people not see? Often with high multiple companies, rapidly growing companies often invest now to create a higher intrinsic value later. And so if you think about a PE ratio is just price over earnings, and we usually use earnings of this year or next year. So when you're investing a lot now, you're depressing earnings now. But that investment can actually create more value later. So we look at cash flows. We try to figure out what are the unit economics again, and let's say 5 years out, what are the cash flows associated with those economics? And when we look at all of that, we think this company is on a path to call it roughly 680 a share. That's kind of our internal price target for 2030. 680 a share, which is basically 2.5 to 3 trillion market value, depending on the share count at that time.
Wow.
So we think that it will regain the ground that it's lost in terms of the share price. And what's interesting about Tesla now, as opposed to, or compared to Tesla when we bought it in February 2020, selling at roughly the same multiple.
Yeah.
So the stock is up 4.5 times and the multiple is the same. We paid roughly 65 times earnings. Oh, in fact, the multiple is a little bit cheaper today. We think it's roughly 60 times today. We paid 65 times in terms of multiple of forward earnings. And so the multiple is about the same today as it was when we bought it. That should give you an idea of how quickly earnings have grown, even despite recent problems. And all great growth companies have problems. I think that's super important for your viewership to kind of think about. All great growth companies have problems. There are always reasons that you will hear why you should sell something, but the real money is made in sitting tight and letting great growth companies compound for you. That's the essence of a white paper that is on our website. It's called The Power and Challenges of Compounding. I highly recommend everybody check it out. And when you think about selling something, just keep a copy of this paper and reread it, because it could hopefully prevent investors from making errors of judgment because they read something or they hear something. They get talked out of it because their friend at the cocktail party says, you got to sell it. It's going down. So everything is in context of, what you're paying for it. So you can have really, really bad news and you can make a lot of money on a stock, and you can have really great news and you can lose a lot of money on a stock. So one has to, again, do that deep work and figure out what a company is worth with all the news going on around it.
So we'll include a link to that Power of Compounding white paper on the show notes for this episode if people want to go and read it. So, Christopher, that $680 price target, that's sort of 4 times where we are today. So you see a lot of growth. How much of that growth is the continued growth of the existing auto business, and how much of it is sort of new product lines? So rolling out fully self-driving and a robo-taxi fleet, or, the robotics that Bryce mentioned earlier. Like, does any of that factor into that 680 price target, or is it just disciplined, good execution of the core auto manufacturing business that gets them there?
Growth of the current auto business in combination with growth of the energy storage business, which we think will roughly equal, maybe exceed at some point, the core auto business in terms of revenue.
Okay.
So we're very bullish on energy. So those are the 2 components that drive our 680 2030 price target. And our price target is not dependent on robotaxi. It's not dependent on a Tesla bot or Tesla insurance or any of the other things that you mentioned earlier people talk about. We consider that icing on the cake if it materializes, and we think that there's a very high degree that autonomous vehicles continue to develop, and that translates into massive high margin revenue stream.
So, Christopher, when you're thinking about the risks, obviously one of the key components there is that they are able to deliver the car sales that get you to that sort of price target. But can you speak more to the risk that they're facing with competition, particularly BYD, and also the risk of Elon Musk himself? Like, what happens if he leaves, or, he's a central key component to where they've got to today. So how do you factor an eccentric, crazy CEO into the mix as well?
It's one of the reasons why we own 21 companies. First of all, there's nobody like Elon. For us, like, if you're not aligned with a once in a generation type of situation from a managerial and entrepreneurial standpoint, a once in a generation, you come across somebody like Elon. And for us, we want to align capital with great capital allocators and great entrepreneurs. He fits that boat. If we were to lose him now, of course, the stock goes down probably quite a bit and then probably recovers after some time, and its trajectory would be uncertain and different. If we lose Elon in 2030, I think that the situation would be much different. It would be akin to Steve Jobs, departing Apple. And you can also make the case that this company, continues to do extremely well given its foundation, with another CEO like Tom Zhao or somebody else in there who's running it, who might not be as much of a visionary, but who might actually be able to do things that Elon can't. So Charlie Munger was a mentor of mine, and he always said that, Steve Jobs could do things that Tim Cook could not do, but Tim Cook can do things that Steve Jobs could not do. So it's not so black and white. Like, this company doesn't just disappear. Your question on competition will increase, but I think that the Chinese players will likely dominate. Companies like Ford are not going to lose 100,000 a year forever. We see Tesla eventually licensing its self-driving software to the traditional automobile manufacturers, thereby creating this high margin revenue stream from software revenue. We think that's a very, very important point that is still not really thought about so much. So Tesla becomes kind of like the components of all the other cars. I look at the landscape of EVs as one where the pie is so big that there's room for more than one player. There can be several players in the sandbox, and they can all play harmoniously at the same time.
Let's close out by talking about the future. And we close out all of these interviews by talking about what this company could be if it executes in 5 or 10 years. But I think for Tesla, the question is a little bit bigger than that, because the question isn't just about Tesla itself, but it's about really what the auto industry and I guess the transportation industry broadly defined looks like in 10 years. So it's a massive question and it's a difficult question to answer. But when you sort of look forward and you think about, what Tesla could achieve if it's able to execute, what do you sort of see the world and Tesla looking like in sort of 10, 15 years from now?
I think it will look a lot different than it does today. In Japan recently, I was walking down this in this bamboo forest, and it was an Edo period road, which I had to look up with, what is this Edo period road? But I'm walking along this Edo period road, which is made of stones. And that was the main road where people would be carried, in rickshaws and so forth, these kinds of instruments. That's their transportation. The future of transportation is going to be very different. And when the Apple iPhone came out in 2007, nobody really understood all of the use cases for that smartphone. And I think that the similar situation exists today, where we don't know what all of the use cases are going to be for an electric vehicle that is autonomous or even 90% autonomous. The use cases are just unimaginable today. But I do see the world as almost entirely EV, and I do see Tesla leaps and bounds ahead of the competition, and them along with maybe 2 or 3 other players really dominating.
Well, in 2023, there were 75 million cars sold, and just shy of 14 million of them were electric vehicles. So if, in 10 years, 15 years, the world is really all EVs, then, that's massive growth for some players, and Tesla's going to have their market share. So, Christopher, thank you for joining us today. I'm sure we'll get you back in the future about Tesla or about some of the other companies that you're looking at. But a massive thank you for joining us on Equity Mates.
Thank you, Alec. Thank you, Bryce. Thank you, Equity Mates.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity